Now, let's talk about tax impact on futures and options transactions. First of all, we have to categorize investments in two parts, that is delivery-based transactions and non-delivery-based transactions. Delivery-based transactions can further be divided in two parts, that is short-term capital investments and long-term capital investments. Short-term capital investments are held for minimum period of 1 day and maximum period of 1 year. If we earn profit from such investments, then such profit shall be taxable under the head capital gain. Such short-term capital gain shall be taxable at the rate of 15%. If we incur loss from such investments, then such loss shall be set off against long-term capital gain or short-term capital gain of any other shares. If in current financial year we cannot set off such loss, then such loss shall be carried forward for a period of 8 years. Now let's talk about long-term capital investments. Long-term capital investments in shares are held for more than 1 year. If we earn profit from such investments, then such profit shall be taxable under the head capital gain under Income Tax Act. Let's talk about rate. Long-term capital gain shall be taxable at the rate of 10% in excess of rupees 1 lakh. Now, if we incur loss from such investments, then such loss shall be set off against long-term capital gain of any other shares. If in current financial year we do not have any long-term capital gain, then such long-term capital loss shall be carried forward for a period of 8 years. Now let's talk about non-delivery based transactions. Non-delivery based transactions shall be further divided in speculative income and non-speculative income. Speculative income is clearly defined under Income Tax Act, that is under section 43(5), which clearly states that purchase or sale of commodities, scrips, shares for other than delivery shall be called as speculative transactions. Speculative transaction is taxable under business income. It shall be taxable at the rate, or we can say it is taxable at your respective slab rates. If you are a person below the age of 60 years, then you will get the exemption of 2,50,000. There is old tax regime and new tax regime, but we will talk about that in another video. If you incur some loss in speculative transaction, then such loss shall be set off only and only against speculative income. If in current financial year you do not have any speculative income, then such loss shall be carried forward for a period of 4 years only. There are certain exceptions which are mentioned under Income Tax Act for speculative income, which clearly states that derivative transactions are non-speculative transactions and futures and options are derivative transactions. That means futures and options transactions shall be treated as non-speculative transactions. Now, what benefit we will get out of it? If we incur loss from futures and options, then such loss shall be allowed to be set off against all other heads except salary. Now, if in current financial year we do not have any income for set off, then such loss shall be allowed to be carried forward for a period of 8 years. Now let's talk about the important point, that is calculation of turnover in case of futures and options transactions. For this purpose, we have to remember 3 important points. First point, favorable and unfavorable differences while undertaking the transactions of futures and options. Let me give you an example for this. Say for example, investor undertaken 2 transactions in futures and options. In first transaction, he incurred a loss of rupees 300. In second transaction, he earned a profit of rupees 1000. That means in total, for these 2 transactions, his net profit was 700 rupees. It is responsibility of taxpayer to pay tax on such 700 rupees. Now, this was about tax paying, but what about calculation of turnover? While calculating the turnover, it is important to remember that turnover will be calculated by adding all favorable and unfavorable differences. In our example, turnover will be 1000, that is profit, and second 300, the loss. That means our turnover will be 1300 rupees. This was first point. Let's talk about second point. The premium which option seller received at the time of selling option shall also be included in the turnover. This was second point. Now let's talk about third point. Say for example, your stock or index makes move opposite to the direction which was initially taken position. In that case, that trade will be called reversal of trade. On this reversal of trade, any differences, that is both favorable and unfavorable differences, shall also be included in the turnover. After calculating turnover, it is important to analyze that whether we are eligible for audit or not. For this purpose, we have to see whether our turnover is up to 1 crore rupees. If our turnover is up to 1 crore rupees, then we need not get our books of accounts audited. But if our turnover is more than 1 crore rupees, then it is necessary that, or it is mandatory that you get your books of accounts audited. But in spite of crossing the turnover above 1 crore, investor may think that he do not want to get the books of accounts audited. In that case, the relief is available under section 44AD. Under section 44AD, investor can show profit at the rate of 6% of turnover. Remember here that if investor want to show such less profit, the turnover must be up to 2 crore rupees. That means if the turnover is greater than 1 crore but up to 2 crore rupees, in that case only this relief is available. Now, after opting for such section in 1 year, in next year, investor may think that he want to show less profit. If he want to show the less profit, that means profit less than 6% of turnover, in that case he have to prove that his turnover and his profit is so less. In that case, he has to maintain his books of accounts and he has to get his books of accounts audited. If the turnover is more than 2 crore rupees, then he has no option. He has to get his books of accounts audited compulsorily. The turnover limit for financial year 2021 is 5 crore for the purpose of analyzing whether the investor is eligible for audit or not. Now let's talk about some expenses. Investor can claim some expenses against his profit. Say for example, internet charges, consulting charges which he has given to investment manager, or any other commission and brokerage will also be allowed against profit. This was short video regarding classification of investments in stock market and futures and option transaction and its implications. If you need any information regarding income tax or GST or accounting, then do mention in comment box. I will definitely make video for it. Thank you so much.